Hi everybody, Chris Boyd here with something more for your financial well-being. Well, these days the markets have been in quite a bit of a turmoil, following a lot of attention on the coronavirus. And so we've just put together a little review for our clients as to some of the take we have right now. I'm recording this on February 27th, and it's been a rough week when we look at market reactions. But we also want to remind people that let's try to keep a little perspective right now as far as where we stand just yet. You know, about a month ago when we did our quarterly review for our clients, we had mentioned that we thought markets were a little bit overvalued, and it wouldn't be surprising to see some volatility re-enter the market. I think to some extent right now that may be all we're incurring right here, that it's a bit of a volatility. Now, we don't know the full extent of how this coronavirus will impact the United States and other economies around the world, but right now it appears, although it's serious for people who have contracted the virus, clearly it's something to be taken seriously, but what economic impact will it have remains to be seen. And although there may be some more significant in certain countries, and it may create more impact here with time, remains to be seen, we think the economic impact is less pronounced. And, you know, when we look at previous experiences with similar kind of concerns, remember back in the SARS and the Zika viruses, markets fell about 12.8%, 12.9%, let's call it 13%. And that's helpful to get some perspective of perhaps what's happening right here. Whether or not these will have significant impact, I think our focus should always be on earnings. What do we expect to happen with earnings? Right now, we still think the markets may be a little bit overvalued. But that being said, for our clients, it's important to remember that with our active allocation process for the people who have our discretionary accounts, we've been trying to be addressing proactively, positioning ourselves in case, because of the perspective that markets might be a little overvalued. We've included certain positions that are a little more defensive. And when we look at what's happened in the market thus far, markets have dropped. S&P 500 as of now is down about 12%. When it comes to foreign markets, down maybe around 9%. And of course, there are some places where things have been going well. Gold, treasuries, things of that sort. Particularly today, we saw high yield bonds taking some hits. For our investors, it's good to know that we haven't had much in those in the high yield bond space. We've had some gold, which has been doing well. And we've positioned our stock portfolio to be a little bit underweight in the stock and a little more defensive going into this quarter. So, you know, by and large, this is not something to be ignored, of course, but it's likely not necessarily something that you need to be overreacting to. Always a good time to revisit your asset allocation and your risk tolerance to say, you know, where do you stand in the big picture? We're still not too far off where we started the year. If you have concerns about your asset allocation, now's a good time to be revisiting that. And we could always be of help in talking about what's the right thing to do in your particular situation. So if you have any concerns, or if people in your family are dealing with concerns, or people in your circle, you want to have a conversation or they want to get some guidance, give our office a call at 508-771-8900 or on the web at amrfinancial.com. Okay, so if you have concerns, give us a call. We'd be happy to talk to you and review your portfolio and how we've positioned your situation, and happy to go over that. So in any case, we have a full, longer explanation of this, and we will likely keep an eye out for some more videos. We're likely to do a longer explanation of how we think this is likely to play out in the coming days. So stay tuned for that. All right, until next time, keep striving for something more.